Good morning, it's today again. Welcome back to Joseph's Reserves. I'm Joseph and I store 20% of my income in the form of rare coins and precious metals. This week in the metals market was one of those weeks where if you only look at the price direction, you miss the entire story. Because on the surface, gold is still down on the week, silver flipped from a heavy weakness into a slight strength, platinum stayed weak, palladium actually turned positive, and copper continued to drift lower. But underneath all of that is the much more important shift happening. We are seeing a transition from broad liquidation to rotational behavior across the metal complex, and that's where things get interesting. Congratulations to Matt M for being the first to comment on yesterday's video. Matt is actually one of our members on this channel, so Matt, thank you so much for your support. It really does mean a lot. Well, for today's video, let's go ahead and start with where the markets actually closed. Gold closed at $4,220.30, which is a weekly drop of 2.53%. Silver closed at $68.16, which is actually a rise of 0.65%. Platinum closed at $1,726, which is a drop of 3.31%. Palladium closed at $1,308, which is a rise of 4.89%. Really surprising for Palladium to be there. But copper closed at $6.13.83, which is a drop of 2.76%. I have been tracking these weekly closes since mid-December of 2025, and I'm actually producing this chart here, where you can see how all the metals perform against each other based on percentages rather than just price. So in this chart, you can see the max volatility in silver, palladium, and platinum, and the stability of gold and copper. But if I solely look at this chart that I've been creating or solely look at the weekly closes, then it doesn't tell the whole story of this week. Earlier this week, metals were broadly under pressure. Gold was leading a downside move, and silver was doing exactly what it typically does in those environments, amplifying the weakness. But then something shifted. By the middle of the week, silver stabilized, then rotated into positive territory while gold remained weak, and platinum lagged behind, but palladium surprisingly led an upside. So instead of one unified direction, we got a rotation inside this metal complex. And that matters because when the metals stop moving together, it usually means the market is shifting from liquidation into a repositioning. But to really understand what's happening here, we have to zoom out. This is where the broader theme matters. A lot of macro narratives happened this week centered around a few key focuses. One is the Fed expectations and market repricing. The market has been constantly adjusting expectations around inflation rates and monetary credibility. And when that happens, metal tends to react first. Not individually, but as a group. And that's exactly what we saw earlier this week. Everything was selling off together. Second is the East versus West gold demand divergence. One of the most important underlying themes right now is the difference between Western investor sentiment and the physical demand behavior in Asia. That creates a situation where price weakness doesn't always reflect the physical accumulation trends, and that trend shows up most clearly in gold and eventually spilled into silver. Another layer this week is energy. Oil volatility continues to influence inflation expectations, which in turn feeds directly into the metals pricing. Copper and industrial metals especially tend to respond and once those macro narratives shift. But if we talk about silver specifically, this is the most important part of this week. For several weeks, silver has been underperforming gold, acting as the higher beta downside asset. amplifying its weakness every sell-off. But this week it changed the short-term structure. Because of the sell-off, silver still led the downside, but on the rebound, silver outperformed gold and actually turned positive while gold stayed negative. This shift matters quite a lot because it tells us something very important. Silver is no longer just following the downside trend, it's starting to lead its own recovery phase. Now, that is not a confirmation of a reversal, but it does suggest something else. We may be moving from a directional trend into a rotational volatility phase. So the big question is this the start of a full reversal or just a temporary bounce? And here's the honest answer. Right now, we don't have any confirmation of a trend reversal because gold is still negative on the week, copper is still weak, and platinum is still lagging. The macro pressure hasn't fully cleared, but we also have confirmation of the continued breakdown. Because silver has already flipped positive on this week, platinum is leading this strength, and correction between metals is breaking down. So what we actually have is a transition phase, where momentum no longer is one directional. Here's what will determine whether this is a real shift or just noise. A bullish confirmation would look like silver continuing to outperform gold, gold stabilizing instead of making new lows, and rebounds becoming broader and more consistent. A bearish continuation would look like gold resuming a downside leadership, silver losing its relative strength again, copper and platinum confirming their weakness, and rebounds fail quickly. For stackers, this type of environment is actually very important because it tells us two things at once. Downside moves are still happening, so accumulation opportunities still exist, but leadership is shifting, so not all metals behave the same. This is why having multiple categories within your stack starts to matter. This is so very important to understand. You should not be all into one metal. I understand that some people get emotional and try to say that silver is the way or gold is the way. It is so incredibly important to have both metals within your stack, as well as some platinum group metals, maybe even a little bit of copper. Diversifying across these metals is so incredibly important. But I might say what is even more important is understanding the liquidity behind these metals. Gold is definitely the most liquid. Next would be silver. Platinum is very not liquid compared to the premiums you would pay, and copper currently has no way to even sell it. So be careful on which metal you're going towards and make sure you understand how you would be able to liquidate all of this investment if you need to. As always, this is not financial advice. I'm not telling you what to buy or sell. I'm simply sharing how I'm interpreting the structure of the metals market this week. The biggest takeaway this week is not just the price movement, it's the structure. We started seeing the week with broad liquidation across the metals complex, but by the end of the week, we saw rotation, divergence, and early signs of leadership change, especially from silver. This doesn't confirm the reversal, but it does tell us something important. The market may be transitioning away from a one-direction sell-off into a unstable rotational phase. And in the metals market, that's often where real opportunities start to form. If you like this week's breakdown, make sure you go down to the thumbs up button and like the video. Go into the comment section to start a conversation or continue one. Subscribe if you haven't already, and share the video with someone you think may like it. To all my long-term subscribers, thank you so much for your continual support. And as always, make sure you check out josephsreserves.com for my merchandise, zip-up bags, coffee mugs, and of course the It's Today Again coffee. But most of all, thank you so much for watching. And just remember, every ounce adds up. So no matter how small, just keep stacking.